stocks trade ranged ahead of outcomes of the trade talks that the US is having with China as well as India. IT and metals are the big gainers, even as Realty and financials drag.
Nestle India CEO Suresh Narayanan says the healthcare space is exploding, also sees opportunities in the ready-to-eat segment and enough room for growth in coffee. The game changer, he adds, will be the speed of innovation.
Commerce and Industry Minister Piyush Goyal calls China's restriction on rare earth magnet exports a wake-up call. He adds that India is actively building alternate supply chains to reduce dependence on China.
Klaus Rosenfeld, who is the CEO of a 25 billion euro Schaeffler, says he's never seen one man influence global supply chains like Trump today. He also says, given that you can't put all your eggs in one basket, India matters.
Net inflows into equity funds dipped sharply to under rupees 19,000 crore rupees in May from over 24,000 crore rupees in April, marking a sharp dip. Flows into corporate bond funds also dipped. However, there is a significant pickup seen as far as bond funds are concerned.
It's another day of consolidation. Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu. With me is Vivek Iyer. Vivek, the frontline index is in consolidation zone. The only thing is that the baton has been passed from Nifty Bank to the export-oriented sectors. We have IT index and the metals, which are doing a lot better, which explains why the Nifty, which is at the top of your head, is mildly in the green, despite the Nifty Bank, which is at the top of my head, down almost 0.5%. After a big rally that we've seen in the last two trading sessions of the Nifty Bank, maybe it's paused for breath. And after the recent underperformance of the IT index and the metals index, maybe they've taken off a tad as well. But this afternoon, as we speak, the broader market is doing a lot better. Conglomerate is doing particularly well. That's the Adani Group. So pull up Adani Ent, Adani Ports and Adani Total Gas along with Adani Green. Just pull up the intraday chart of all the Adani Group stocks and you'll see a big move coming by in just the last 10 minutes or so. All these stocks surging to the high point of trade. Hi Vivek, good afternoon.
Good afternoon, Manglam. Like you rightly mentioned, baton has been passed from the banks or the BFSI space to the rest of the market, the Nifty, the mid-cap, as well as the small-cap space is doing quite well. Well, a couple of stocks on the radar. Remember, MCX yesterday actually saw a very significant up move. Today, it's seen a bit of cool-off even as we speak. MCX at the day's lowest point, over 2.5% lower after opening the session in the green. But one stock that's doing very well in the session is Grasim. Grasim is surging in trade after a positive note from Morgan Stanley. Nigel joins in with more details.
Well, that's right. The paints business actually has fared far better for Grasim, and that's why, in fact, Morgan Stanley is quite optimistic on the prospects. They've gone ahead, they have upgraded the stock, they've pumped up the target price as well. So from having an equal weight, they've gone to an overweight, and the target price they placed it at around 3,500 rupees per share. They say that the paints business scale-up has been better than expected, and that's why, in the SOTP, now they're assigning 360 rupees per share. Earlier, it was around 150 rupees per share. Now, in terms of the cement business, they say UltraTech remains the largest value driver for Grasim, and Grasim will benefit as UltraTech's earnings compound for the next few years. The next point they make is on the new age businesses. They say that that's scaling up fast, that's driving earnings, and it also gives a value optionality in the time to come. And finally, on the holding company discount, they expect it to continue to moderate. And put all this together, they say that Grasim is their top pick. So put all this together, Morgan Stanley upgrades the target price, upgrades their rating on Grasim, and the stock is reacting positively.
Well, thank you so much, Nigel. So Grasim, UltraTech both reacting favorably, but you're also tracking another stock, and that is Jindal Store. They announced a capital expansion in West Bengal. Stocks moving sharply higher today. What do you make of it, Nigel?
Well, that's right. Jindal Store, they have gone ahead and they've announced a big capex in the Middle East. That's in the UAE as well as, in Saudi Arabia. Now, this total capex that they've laid out is close to around $100 million, a little more than that. That's via three ventures. In one of them, they'll have a 100% stake, and the other two, they'll have a 51% stake. Now, they've set their sights on the Middle East, and the street likes this. Why is that? Here are a few reasons now. First, the street was very skeptical on the prospects of the business going ahead because there was no capex that was being put out. Now, since they've laid this capex of more than $100 million in equity contribution, there'll be a debt component as well. The street believes that they're a little bit more confident in terms of growth, and that's why they're laying this capex, because there's a big opportunity out there. So that's point number one. The second factor is, even after the big move that you're seeing in today's trading session, well, the stock is still down sharply in the last 6 months or so. So it's a badly beaten down stock that's bouncing back. And point number three is, in terms of valuations, the stock trades at less than 5 times EV upon EBITDA, which is relatively more attractive. So put all these 3 points together: announcement of fresh capex, the stock getting beaten down, and valuations attractive. Explains why the street has taken this development rather positively.
Take that point, Nigel. Thanks a lot for that. 6.5% higher on Jindal. Saw a trifecta of factors actually taking that stock higher. But the Commerce and Industry Minister Piyush Goyal calls China's restrictions on rare earth magnet exports a wake-up call. He says that India is actively building alternative supply chains to reduce the dependence on China. How long will it take, and what is the extent of that? Let's hear out from the minister.
There are issues around the stopping of permanent magnets from China to India, which will affect our auto sector particularly, and several white goods and other sectors. Our embassy is in dialogue with them. Commerce Ministry is also working. Some companies have put in their applications, and we hope that good sense will prevail and they will get their approvals for permanent magnets. Having said that, we are working on several other tracks to see the availability from alternate sources, to look at our Indian Indian Rare Earths Limited, providing the necessary materials to be able to speed up the development of our own products. And in a way, it's a wake-up call for all those who have become over-reliant on certain geographies. It's a wake-up call for the whole world that you need trusted partners in your supply chain. And India is now becoming the alternate that the world is looking up to, because with India they have the confidence that they will never have to suffer this kind of problems.
All right, that's the word coming in from Piyush Goyal. But, the big number at the bottom of your screen, we just got the May mutual fund data overall. The number that comes with a lag is the SIP flows data, and that's exactly what is flashing for you on the screen. 26,688 crores. It is a record high, yet another record high for the SIP monthly data. Remember, the last month it crossed that 26,000 crore mark for the first time, 26,500 crore for the first time, and thereafter we saw it move higher. So after a few months of just stagnating around that 25,000, 26,000 crore mark between December and March, yes, the month of April saw 26,632, and May topped it by going to 26,688 crores. So that strength from the retail investor, from all those who continue, the disciplined investor continues. The only other data point that we need to watch out for now is the SIP withdrawals, which as a trend have also been increasing for the last few months. But let's speak about another group of stocks, and that's the state-owned telecom companies, because the centre has written to state governments' requests for the use of BSNL and MTNL services. Ashmit joins in with more details on that one. Ashmit.
Well, an important letter being issued by the Department of Telecom to various state governments. And this is interesting because the centre is essentially telling the state governments, requesting them rather, that's the word used, requesting state governments, all their departments, all their agencies, all their PSUs to start using BSNL and MTNL services for their internet, for their landline, for their telecom requirements. Now, this is important because this letter is quite detailed. It cites how in 2019, the cabinet at that time, in 2019, had mandated that for all central government ministries and agencies, only BSNL and MTNL will be used. This was a mandate issued back in 2019. And in the same year, a request again had been issued in 2019 for the state governments to then migrate towards BSNL and MTNL. That same request, we understand, is being renewed now. What the DOT says as a part of its letter is that just like in 2019, Cabinet had requested state governments to use BSNL as well. At the time in 2019, there were data security needs that had been cited back by the Cabinet. Subsequently, DOT then goes on to say that BSNL and MTNL are already meeting the requirements of the central government, the armed forces, the core banking telecom requirements are met by BSNL, going on to say that there have been 3 revival packages, 2019, 2022, 2023, that in light of all these revival packages, BSNL and MTNL have become even more competitive. And with that, renewing its request, renewing the center's request to the states to consider use of BSNL and MTNL for all state government departments, agencies, ministries, and then going on to say that BSNL will even facilitate this by appointment of a nodal officer. But broadly, the message being sent out is, look, in 2019, we had requested you. There were data security concerns. We're renewing that request once again, and we urge the state governments to go ahead and start using BSNL and MTNL for all their departments, ministries, and agencies going forward.
Thank you so much, Ashmit, for joining us, giving us the complete details of this important developing story. The stock of MTNL is doing quite well in the session, up over 2.5%. But moving on, before we slip into a short break, here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back to Halftime Report. Well, one particular stock that's doing quite well in the session today is spirits maker United Spirits. It's been reacting positively on the back of reports of its parent company Diageo PLC looking to cut down their stake in IPL franchise Royal Challengers Bengaluru. In our special offering, Value Plus, Mangalam tells us about this particular development as well as about other listed companies that own IPL franchises.
Well, you know, as a franchise, IPL has actually been a seriously big wealth creator for all those individual teams and the franchise at large as well. The fastest growing sports franchise in the world now in terms of broadcast rights, second only to the US-based NFL. And because it's created so much value, as teams when, you know, started out in 2008 were valued at around $100 million and now going all the way up to $2 billion. So that's some serious wealth creation out there. It's only fair to see whether companies are looking to unlock part of that value that has been created over so many years as well. And what better way to do it at a time when, you know, one of their franchises has gone ahead and won the IPL for the first time after 18 years. It's the Royal Challengers Bengaluru that we're talking about. Diageo PLC, which is the parent of India-listed United Spirits, is actually, what we understand from Bloomberg reports, is considering options for its ownership in the IPL franchise RCB. They're holding discussions with potential advisors and weighing possibilities of either a part sale or a full stake sale in the club. They may seek a valuation of $2 billion. They're saying that no decision is final and they may eventually decide even against selling the team, but no harm in testing the waters at a time when, you know, everything is at the peak. A spokesperson declined to comment for Diageo, and that's a Bloomberg story. We ourselves individually reached out to United Spirits as well, and they said this is market speculation and they do not want to comment on that. It made me think a little about what are the other listed companies which have their IPL teams. Right. As of now, you know, we have conglomerates which own the IPL teams, but from a listed company standpoint, there are just 3 which stand out. United Spirits holds a 100% stake in Royal Challengers Bengaluru. You have Sun TV, which holds a 100% stake in Sunrisers Hyderabad. And you have RPSG Ventures, which holds 51% stake in Lucknow Super Giants. The other 49% is held by Sanjeev Goenka and family in personal capacity. You would ask what happened to India Cements. Way back, they demerged CSK from it itself, and India Cements now is owned by the Birla Group itself. Mumbai Indians, no part of Reliance listed group has any stake in Mumbai Indians. So listed companies, only 3 of them, United Spirits, Sun TV and RPSG Ventures. Now, for one, even if you do go ahead and believe that, you know, $2 billion worth value is unlocked in United Spirits, for a market cap of 1.15 lakh crore, it accounts for just about 15% of their overall SOTP, if you must. Right. For Sun TV, that's an interesting prospect out there. Why is that? Because, you know, even if you ascribe a valuation of $1.5 billion, not as big as RCB, but maybe, you know, $1.5 billion, their market cap is close to 25,000 crores. So 50% of their current market cap is accounted for, can be accounted for as the IPL business. And RPSG Ventures, which is the holding company, has 51% stake in LSG and has a market cap of 3,200 crores. If you just do that math, it's 145%. But there are a lot of complications out there as well, because part is owned by the family group company itself. What kind of holding company do you ascribe to this? And could there be any sort of value unlocking out there? Perhaps not at the near future. And what kind of value do you ascribe to the remainder? So in that case, Sun TV is the one that really stands out, with nearly 50% of the business now being available for the media valuation as against the 50% which is owned by the IPL.
That's the serious business of sports entertainment, if you could call it. But what valuation growth, right? From around 150 million at the start, almost 20x in 18 years.
It's a big valuation jump, and the biggest reason for that is, one, the Indian advertiser market has increased, the sports market has increased. Three things have happened in the meanwhile. While the middle class has increased, the sports market has increased, and the advertiser pie has increased, digital has become an important part. In 2008, we didn't have as many digital viewers. The smartphone penetration has made as many digital viewers of this product as there are television viewers. So it's really doubled the game for everyone out there. But these are conversations that we can keep having without any, paucity of time. But let's talk about another stock which is on our radar right now. So on our BLW, that is under pressure after a Bernstein note has come in this morning. Sudarshan joins in to tell us a little more about Sona BLW. Sudarshan, after a big move, stock down about 1.5%.
That's correct. So in last 1 month, or say just more than a month, the stock had gained almost 37% from 52-week low. But today, Bernstein has come out with a note downgrading the stock to market perform from outperform, and has reduced target price to 540 from 550. It has given few near-term risks, and some of them are: first, Trump and Elon Musk tensions; second, Trump's proposed bill phasing out EV subsidies; third is ongoing US-India trade issues; and fourth, rising strength of Chinese OEMs. And factoring all this, it believes that there is a risk of earnings downgrades as the company has a huge exposure to US and also to electric vehicles. 77% of company's order book is tied to electric vehicles, and US forms nearly 40% of company's total revenue. Also, its largest customer, that is a US EV OEM, which forms nearly 15 to 20% of company's total revenue, has been losing market share over the last few months. And now Bernstein has gone ahead and has lowered FY 27-28 auto estimates of the company by 4 to 5%, considering that it sees earnings risk downgrades over the next few months, or say in a year or so. So that, and factoring all this, you can see there is a down move of more than 1% in the stock price.
Thank you so much, Sudarshan, for joining us and giving us the downgrade note coming in as far as Sona BLW is concerned. Well, it's now time for a short break. Sachitanand Uttekar from Trade Bulls will join in with some trading strategies on the other side. Stay tuned.
Welcome back. Let's take a note of what is happening in the F&O space. The frontline indices, absolute consolidation out there, and that's because of the change in baton. So if you look at the key indices, the Nifty as well as the Nifty Bank, the Nifty is absolutely flat, mildly in the green, though the Nifty Bank is closer to the lower end of today's trading range so far. 56,500 is where important supports are seen for that index. So let's see where that goes from here. But on the other hand, we have the IT sector and the metals, both export-facing names, doing a lot better, perhaps on hopes of some improvement in the world trade situation with the US and China talking right now. But what's interesting is for the last few trading sessions, the Nifty has been facing supply between 25,000 and 25,100. Now, post the RBI policy meet, the structural upside of the Nifty has moved by about 100 points. And yesterday's high was 25,160. Today's high, closer to 25,200. We've seen supply out there, and the Nifty is bought itself back to that 25,100 fulcrum mark itself. The advanced decline doing a lot better, though we have the lines coming closer to each other over the last half an hour or so. So it's not like a parallel train track as it was in yesterday's trading session. The only good part is that despite the market consolidating, the India VIX has fallen. So yesterday it was slightly stable, and today is down 4%, telling you that there is a fair amount of put writing. So any sort of move on the next, direction would perhaps be on the upside. Why do I say that? Because 25,100 put writers, fairly active, premium of 70 rupees, telling you closer to 25,050, there would be support. And for the writers, the call writers, 25,200 is a level that they are watching very closely for a premium of 63 rupees. So if the Nifty sustains above 25,250, these call writers will have to run for cover, and that would cause a further up move on the frontline index. A lot of longs added, like we spoke about IT and metals doing well. So you have Persistent, Nalco and Coforge. In the broader markets, these stocks are fairly well bid with a lot of long positions being added. I'm just watching out for IREDA and RBL Bank. Why? Because they may enter F&O ban in today's trading session. The open interest jump has been fairly high, and Hindustan Copper usually gets in and out of F&O ban ever so often. Recent entrant into F&O ban with a big dip that we are seeing in open interest, not quite out of the woods yet, but may exit F&O ban, if not today, then perhaps tomorrow. So those are a bunch of stocks I'll be watching out for too, Vivek.
Thank you so much, Mangalam, for taking us through the key cues to watch out for as far as the futures and options space is concerned. Well, it's also a very good time to get a grip as far as the technicals of the market are concerned. Sachidanand Uttekar from Trade Bulls joins us on the show. Sachidanand, thank you so much for joining us. Good afternoon to you. Do you feel that there is now more upside as far as the Nifty is concerned? Can we scale higher, or do you feel we could see some moderation at current levels?
Good afternoon, Vivek. Good afternoon, Mangalam. And clearly, I think the bias for the market remains positive. We are expecting that this overall rally would stretch towards 25,500, 25,630 kind of a zone. But at least for the next couple of trading sessions, as Mangalam has already pointed out, the data is indicating some range-bound action. Now, if you look at the Nifty, 25,200 looks like a confident area for call writers, but on the lower side, 25,000 looks like a very dependable support. So I think it's better to wait for a decline and redeploy some long positions. One can keep a stop loss at 24,970 on a closing basis and wait for the declines to accumulate further longs. Eventually, we do see the Nifty, surpassing this particular hurdle as well and scaling higher towards 25,550, 25,630 kind of a zone. When we look at Nifty Bank, even here, if you look at the 60 minutes data, the RSI is showing signs of divergence. So probably we may see the Nifty Bank, getting locked into a range of 57,000 on the higher side. And there's a good support somewhere close to around 56,200. So even here, a buy and declines strategy would be much more fruitful. When we look at both the indices, there are no traces of any major reversals. Probably for next couple of trading sessions, we may see sideways action. But declines are something which will be very meaningful, and one should retain their long positions. When it comes to Nifty, the stop loss should be placed at 24,970.
All right, Sachi, just hang in there. We'll come back to you for your stock picks. But meanwhile, just keep an eye out on Avenue Supermarts, DMart that is, because in the last few minutes or so, there have been multiple large trades on Avenue Supermarts where 0.2% equity has changed hands, and as a result of which the stock has taken a sharp knock lower. 0.2% equity for DMart equates to close to around 633 crore rupees. Though because it is 0.2% equity, unfortunately, over the reporting data, we may not get the participants of this large trade. But key to know that nearly 75% of the equity is held by promoters. And as of, March, we have domestic institutional investors holding about 9% stake in the company, of which the largest is ICICI Pru, close to 3%. We have FIIs that hold about 8% as well. And in terms of individuals, we have Ignatius Naval Narona, who is basically the outgoing MD CEO of Avenue Supermarts, who holds about 1.94% stake. Over the last 8 or 9 quarters, his stake has been coming down by a smidge, 0.05, 0.04 odd percent. So let's see, where this goes from here, who perhaps the participants of this large trade would be. Unfortunately, because it is just 0.2% equity, it won't be reported by norm, but I'm sure market intelligence will do their job and we'll try and find out who the sellers or participants on that deal are. DMAT lower by about 4% on the back of that 600 crore large trade. But with that, yes, Vivek?
No, I want to check if Sachidanand is there for his individual picks, or we could move. Yeah. Sachidanand, thank you so much for waiting. DMart at the day's lowest point. Now, do you have a view over there? And what are your individual trades for the day?
Vivek, I think when we look at DMart, the selling pressure has been very significant. Again, the stock has trending below its 200-day exponential moving average. Now, on a closing basis, the level at around 4,040 would be very critical. In case if we see a closing below the same, we may see an extension of this particular move on the lower side. The immediate support after 4,040 is placed somewhere close to around 3,800. So the bias for this particular stock as of now remains neutral to negative. But when we look at the other pockets of strength, what we have observed is that the power stocks are, significantly outperforming. And here, Torrent Power is one particular stock which has hit our radar. Now, if you look at the overall structure, it looks like a consolidation. But last two trading sessions, we have seen a significant long OI addition here. The put writing base at 1400 has been very significant, and when we look at the RSI, it has managed to sustain and give a close above that 50 mark. So, which is an indication there could be a strong revival in this particular counter, and hence we are recommending building long positions here with a stop loss at 1405 for a positional target of around 1480. The other stock is Havels. Now, if you look at the last three trading sessions, there has been a very strong, significant reversal. It looks like a V pattern breakout, plus a short covering, which is evident. In fact, if you look at the weekly charts, there was a weekly bullish hammer formation last week. This particular hammer formation is indicating that there could be further.
Right.
So we are expecting a move towards 1660 in Havels, and we are recommending building long positions here, keeping a stop loss at 1548.
All right, we take that point. Thank you so much for joining in, Sachi. Wish you good trading session ahead. But with that, let's introduce you to something very cool, which is a world where insight meets influence. CNBC TV18 Access. It's a members-only platform offering users premium content, strategic market intelligence, and access to the minds of shaping India's economy. This is from behind-the-scenes interactions. You get priority access to CNBC TV18's flagship events. You get studio access and masterclasses along with elite lifestyle perks. It's more than just a membership. It's your front row seat to the future of business and growth. The power of insight, the privilege of access, and exclusivity, experiences, influence. All of this is yours to claim. How do you do that? Become a member. Log on to cnbctv18.com/access/plans.
Welcome back to Halftime Report. Well, just a couple of minutes ago, we saw a large trade take place as far as DMart is concerned. We understand a little over 400 crores worth of shares actually went ahead and exchanged hands. Post that, Mangalam just highlighted it a couple of minutes ago. The stock hit a day's low of 3,940, and there's been a very sharp recovery. The stock is now at over 4,060 rupees a share. So that's one particular stock to keep on the radar. It'll be interesting to see whether any details emerge. But like Mangalam said, since less than 1% of total equity exchange hands, there is likelihood that we will not get the details when the block deal data comes out today. Well, another couple of stocks to keep on the radar. Remember, RBL Bank was one particular outperformer, especially ever since the rate cut happened. That stock had moved up quite significantly. Today, that is seeing a bout of profit booking. The other set of stocks that are seeing a bit of profit booking are the realty names. Look at names like Oberoi, look at names like Prestige. All of these names, especially Prestige Estates, that particular stock is down over 2% in the session today. But now moving on, remember, India is the place to be for the next few years. That's the word coming in from Klaus Rosenfeld, Global CEO of Schaeffler AG. He spoke to Prashant Nair about how Schaeffler is navigating the unpredictable global environment and why India is central to its future. Let's listen in.
The environment is very dynamic. It is an environment that is unpredictable. It's an environment that is certainly challenging to navigate. Certainly this is something where you need to be agile. And agile starts with listening, analyzing, and interpreting very carefully what's happening. That requires an open mindset. It also requires experience. I've been leading this group now since 2014 as a CEO, and I have to say I've never seen something like this that is so fast changing And I also have to say, so much dependent in certain areas on decisions of single individuals like President Trump. However, it's not just agility that counts here. I think what really counts is resilience. And resilience comes certainly from the business model.
Whether there is a push from certain partners, and that seems to be the general feedback that we get, that too much of manufacturing is out of China. So you need to sort of be based out of everywhere, other places as well. So China +1 in that sense.
Oh yeah. Sorry, then I misunderstood the question. For sure. I mean, the catchword here is diversification. I mean, we cannot afford to put all the eggs in one basket, and that's why India is so important. India, from my point of view, is the place to be for the next years. India is one of the economies that is growing faster than many other countries. India has some natural advantages that other countries don't have. You have this vast pool of talent. You have big infrastructure programs. You have political stability. You have a government that leads now through several years very continuously into the right direction. And that is something positive. And that's why we see India as one of the key growth regions for us, also balancing risk and rewards in this global world. And that's why I'm here today in India, to look after the opportunities we have, see what our people are doing, also in terms of integration. So India is high on my list as a part of the markets where we want to also diversify.
Welcome back. There are a few stocks that deserve notable mention, and the reason why I'm saying that is because at a time when all the export-facing sectors, particularly IT and pharma, IT and metals are doing well, how could pharma stay too far behind? So we have Dr. Reddy's, which has moved to the high point of trade. In fact, in the broader markets as well, we have Alchem Lab, which has moved well. We have Granules, which is doing well, and then we also have First Source, which has moved well. First Source, of course, it's a mid-cap IT name. So we have Dr. Reddy's, the pharmaceutical stocks doing well, and then we have Tata Motors as well. Remember, a large part of Tata Motors' sales does come in from exports, the JLR business, and more importantly, a large part of their what the future holds for them also rests on what takes place between the US and China when it comes to that trade deal. They held their investor meet yesterday, and there were positive comments that came in. The stock was mildly in the green yesterday as well, and now has found more buyers, currently at the high point. But we started the show by taking note of the Adani Group stocks, that conglomerate doing well, and that continues to surge. So if you look at any of these Adani Group stocks, Adani End, for instance, moved higher, saw a bit of a dip. That dip has quickly been bought into, and that's the case for Adani Ports and all the other names as well. If you look at Adani Green, that dip was bought, and now the stock's moved even further higher from there, has moved to the high point of trade. And before we take that short break, pull up the intraday chart of Havells. It was one of the buy calls made by Sachidanand Duttekar on the show itself. Was at the high point at that point, continues to move higher. So that's Havells, which is up around 4%. So not looking too bad for the broader markets, even as the frontline indices are consolidating. The Nifty Bank too is minorly off the lows. Currently, we had 56,500 as a support. The index is about 150 points above that, a smidge higher from what it was, say, 30 minutes ago. We take a short break and rest our coverage on equity markets. On the other hand, on the other side of this break, we have Manisha Gupta joining in with Sunil Kashyap, who's the director of FinMet. They will discuss commodities and all things currency.
Welcome back. Joining us on the show now is Sunil Kashyap. He's director at FinMet. Sunil, hi, thank you so much for joining in. We have seen gold prices hit all-time highs, and the way silver seems to be catching up with those kind of gains, did you see it coming?
I think it was, we heard from some time ago that there was real inflows into the gold market globally, and you're seeing that reflected into the price. And that's why you've seen gold go up. But silver really was a laggard. So the surprising thing for us this week has been the sudden jump in silver, and it's finally catching up to the momentum that gold saw.
Is it done running up, or do you think this is just a breakout and there's a lot more gains in picture?
Yeah, I think, last time silver crossed $36 or 35 and a half, which is a sort of a resistance level. The last time it crossed was in, I think, about 14 years ago. And at that time, it ran all the way up to $48. So that's what the market is talking about. I think there's a cry in the market for $48, maybe even $50 as a target. So you're going to see some follow-on buying, and you should see some stronger momentum in silver going forward.
Mr. Kashyap, would you say that the gold-silver ratio that everybody seemed to be talking about for the last couple of months has finally played in?
Yes, it has. I mean, so let me explain. Traditionally, the gold-silver ratio, which is the gold price divided by the silver price, has been traditionally around $50 to $60. In the last couple of years, with the gold prices going up, the silver ratio had gone to around $90, $95 or so, and it traded at $95 for most of last year. What happened in the last month is there was a breakout, and gold ran up to $3,500, as we saw. Silver remained where it was. So the gold-silver ratio went all the way to 106, 107. So the market was looking for a correction, and now we've seen that. We've seen this run up in silver, and gold has sort of come off. So the gold-silver ratio is now back to about $92, 92 from a high of about 106, 107. And I think the market's looking for further increases in silver prices and a decline in the gold-silver ratio. But I would say one more thing, Manisha, is one thing you should look at, which is a very quiet metal, which is platinum. Platinum also is incredible. It's gone up 25% in the last 3 weeks. So if you look at platinum prices, let's say around the 15th of May, they were running at what, $900, $950, $980 per ounce. And currently they're trading at $1,250 to $1,228. So there's been a 25% increase just in the last 15 trading days. So that's really, you can see that in the charts also. The move up in platinum has been phenomenal.
Oh, well, absolutely. It's actually taken above all the other precious metal prices with 37% gains in this year until now. Sadly, Mr. Kashyap, there's not so many venues in the Indian markets to go around investing in platinum, except if you're buying it in physical, and that too in form of jewelry there. How are you looking at between gold, silver, the way platinum has run up? Palladium seems to be doing quite well as well. Where would you want to allocate funds at these levels? What are you advising?
I think what we advise customers is you have to look at it in two ways. One is the yellow metal, which is gold. Gold is definitely an investment play. It's a diversification play. Don't look at gold in terms of running up, in terms of appreciation. Gold is a part of a portfolio and it gives you diversification. A lot of people don't realize that the correlation between gold and the stock market is actually negative. That means when the stock markets go down, gold goes up. So a lot of the professional investors keep gold in their portfolio just as a hedge or a diversification against something catastrophic happening to the other part of the portfolio. So gold, I think, should be looked at as a diversification tool. As far as the white metals are concerned, silver, platinum, palladium, these are industrial metals, much like copper. And so they get driven a lot by investment, but also by industrial outlook. And I think what's happened is that the reason you've seen this sudden increase in the white metals is they were being held up because of the uncertainty for tariffs. And there's a feeling now that maybe the tariffs are not going to be that bad, and therefore industrial growth is going to carry on. And so now you've seen that pent-up sort of buying being released, and they've suddenly gone up. So the white metals, I think, are more industrial play, and if you believe in solar and other uses of silver, silver is a good buy. And I think a lot of people do believe that silver's been held back, and this is the time for its explosive move up, much like gold saw most part of this year.
I clearly see that bias towards silver coming in from the conversation. Mr. Kashyap, thank you so much for joining in, making sense of what really is happening with the precious metal prices. We look forward to more conversations in coming few days as the precious metal and the base metal prices continue to be much the flavor. With the tariffs going on, the weakness in US dollar and the expectation that we will be looking at the interest rate cuts as well as early as in the month of September. But with that, that's all the time that we have on the show. Business Lunch takes all the action ahead.